Thank you so much, Dave of Festival of Traders, for inviting me to this event. I'm here to talk to you about something that a lot of traders and investors don't think about. It's structure. We're going to talk about structure today. A lot of traders and investors don't think about structure. What would be the danger of not having structure in your trading and investing business? What do you think? Just think to yourself. Answer this question to yourself. How many of you in this webinar think of yourself as a structured trader? I want to see some Y's in the boxes if I can to get some interaction here. And how many of you people in this, how many of you in this webinar think of yourself as an unstructured trader? And how many of you are unsure? All right, when I speak about this topic, people have different reactions. 10% of the people totally love what I'm saying and they completely agree and just love it. And about 60% of traders are kind of tuned out. They just don't want to hear it. And about 30% of traders get really angry because I'm challenging them with new ways of thinking, and they don't like that. So think of which one you are. But in a crowd like this, most are probably in the 10% group. That's what I would figure. So my goal today is to show you the framework, the methodology that moves traders from unstructured to structured, that includes understanding how market cycles based on Elliott wave principles and disciplined trading habits work together, and why 2026 is the year to reset how you trade from the inside out. So first, we've got to start with the disclaimer. Very important with any strategy that you use, even though I'm not teaching you a strategy today. It's really important that when you do start a new system, methodology, strategy, that you test it and you understand that there is a risk of loss associated with trading. So I'm just going to tell you a little bit about my background. I started my career on Wall Street and Bay Street with JP Morgan, where I traded currencies and managed multi-million-dollar positions for the bank. And then I later expanded into futures, stocks, and options, which is what I trade for my own account today. So for more than 2 decades, using my special approach called the structured investor and trader model, I've dedicated myself to coaching traders and investors to move from emotional, inconsistent results to consistent rules-based success through my company, FX Trader's Edge. And I'm also the author of a widely respected book called The Trader's Pendulum. My work has also been featured in major publications, including USA Today and International Business Times. So let's get back to the structured trader. In order to understand this, we need to begin with 2 characters. Meet Farrah and Fred, the unstructured traders. So let's talk about stage 1, the excitement phase. They're both confident they can make a killing, but they really have no idea why they want to make this killing or what it's even for. They're easily influenced. They follow everyone on social media. They get sucked into the market hype, guru promises and tip services. They jump into trades impulsively without knowing why, and they have no goals, no boundaries, and no rules. And then stage 2 is information overload. In stage 2, they start learning everything. They devour everything on the internet. They research obsessively. They chase every strategy under the sun. And they're always looking for this holy grail strategy, the next guru, anyone to give them winning trades. And then stage 3 is called the trap. Eventually, after following countless mentors and still getting poor results, they begin to feel lost, helpless, and hopeless. They swing for home runs, but they lack structure. Farrah and Fred are stuck in the unstructured trap. And if we're being honest, many traders and investors recognize pieces of themselves in that story, even though it is a severe case of the unstructured trader. But there's something important that you need to know. Even with all this structure available, most traders never reach their full potential. Why is that? Well, they make one critical mistake, and the mistake is focusing on strategy rather than structure. You see, focusing on strategy keeps you stuck, and focusing on structure sets you free. It's really, really important to remember that focusing on strategy keeps you stuck and focusing on structure sets you free. Even if you have a winning strategy, if you put 100 people in the room trading the same strategy, trading the same signal service, you're going to get totally different results. That's just a fact. You're going to get totally different results because they're focusing on the strategy and not focusing on the structure. So now let's meet Steve and Stacy, our transformed structured traders. But here's the key. They didn't start out that way. Steve and Stacy were just like Farah and Fred when they began, operating with no structure, no clarity, and no consistency. But over time, by following the transformation process we're going to talk about today, they evolved. They made the shift because that's what a structured trader does. Steve and Stacy are still emotional, but they're able to manage their emotions because they have structures. So if the market drops, instead of asking and instead of panicking and reacting, which is what unstructured traders do, they ask, what is my structure? What is my structure? And that shifts the brain, changes the brain from being so totally whacked emotionally to just bringing the trader back to structure. Do you think Warren Buffett has structure? And who in this room wants to have structure so you don't live in fear and greed? Who wants to have structure so that emotions aren't in charge? Okay. I hope you're all saying to yourself, I do, I do. So I've had the privilege of working with more than 2,500 clients over the years, over the many years, guiding them through this exact transformation from unstructured traders to structured traders operating at their full potential or getting there. It's a work in progress. It's a work in progress because we're always growing as traders. But many traders stopped chasing strategies and started to build structure. They weren't born structured. They understood in order to make more money, feel calm and confident, and make structure-driven rather than emotional decisions, they had to learn structure. And they learned it, and so can you. So how did they transform? I'm going to teach you 3 of the 5 structure builders. That's all we have time for today. The pillars that turn unstructured traders into structured ones. And I teach all of my clients these 5. 3 is what we're going to discuss today. And by the way, you can have a structured conversation with me for free. This is what I'm offering you today. I'll talk more about it at the end. It's good for 10 people only. It's a 60-minute free session, and I'll help you start working on your structure. So if you want to set it up, there is a QR code. You can book it at any point. So just take a screenshot of this if you're interested, and I will show it again at the end. And also at the end, I will give away a free gift. Okay, so you might want to stick around until the end. So now let's get started with 3 of the top 5 structure builders. Okay, the essential pillars, the essential elements to move you into structure. For each structure builder, we're going to begin by looking at the unstructured mindset. So how does the unstructured trader think and without even realizing it? And then we will shift to the structured approach that changes everything. And to make it real, I'm going to share actual client case studies, real people who went through this transformation to move from unstructured to structured trading. So today we're going to do purpose, process, and performance. Purpose, process, and performance. The first the first is purpose. Know your why. Okay. The first unstructured mindset related to purpose is this: unrealistic expectations and no clear why. random goals, no why behind those goals. These traders believe they can double, triple, quadruple their money in a month or yeah, and trade from an island with zero structure, zero discipline, and zero purpose. What is the consequence of this? When your goals are random, your results are random. And when your expectations are unrealistic, trading success becomes an illusion, something you chase but never actually catch. Now let's look at what a structured trader does instead. A structured trader starts with purpose, real goals, meaningful goals, goals tied to their why. They know exactly what they want, why they want it, and who they need to become to achieve it. And believe it or not, that also filters down into the trading day. Like if you're sitting there in your trading day and you're looking at a chart, if you don't have clear goals about where you think the market is headed, where it's going, you're going to be very wishy-washy in your trading. But if you can look at the chart and see a clear pattern, see something following your strategy, and you say, okay, this is my strategy, this is what the chart is telling me, this is what I'm going to do, and you take action, that's having goals on a micro level. Okay, but that's so it really filters down to taking your trades as well. But getting back to the vision for the trading business, instead of chasing fantasies, a structured trader creates a vision for their future and aligns their trading with that vision. So purpose gives them direction, intention, clarity, and motivation that doesn't burn out. You know, many traders experience burnout by trading 24/6 and not really and just spinning their wheels. It's like a hamster running around in a hamster wheel and never being able to get out of that rut. Maybe some of you can relate. Maybe some of you can't relate. That's fine. So with purpose, traders move from random results to intentional outcomes, chasing illusions to building long-term achievement, and from wishful thinking to strategic, structured execution. And purpose is the first structure builder because it's the foundation of the other structure builders. I'm going to continue with a case study in a moment, but did you know that the bigger your why, the easier the how? When you're crystal clear on why you're doing something, the how becomes that much easier. Purpose turns effort into momentum. So let's do a case study. With a real example, I've changed the name, but this is a real coaching client of mine. One of my clients, Howard, came to me wanting more structure in his investing, but what he really needed was a stronger purpose. And during our work together, something powerful emerged. Howard realized his true vision wasn't just to grow his portfolio, it was to create a legacy for his 3 children. He wanted to build something that would last, something meaningful, something that would outlive him. And then he took it even further. He shared a dream he had carried quietly for years, to create a foundation to help those less fortunate and to use his trading success as a vehicle for giving back. That became his why. And once that why became clear, everything else shifted. His discipline increased, his structure strengthened, his decision making became more intentional, and his confidence grew. Today, Howard is truly a structured trader, trading with purpose, building his legacy, and moving closer every day to the vision he created for his family and his foundation. This is the power of purpose. When your why is big enough, your how becomes possible. And let me just share something else. When you don't have a clear why, trading and investing is more gambling. Maybe that makes sense to you, maybe it doesn't. But I have met many traders who make a lot of money, lose a lot of money, and when I ask them, you know, what their goals are, they look at me and say, I don't know, to make money. And that's just, that doesn't give them a clear purpose, because when they make a lot of money, they can easily then give it back if they don't have a clear a clear purpose. And that's what I see happening over and over and over again. So now we're going to move to another structure builder. Process, create a repeatable workflow. The third unstructured mindset is this: having no system and no routine. These unstructured traders show up differently every day. They trade based on mood, impulse, headlines, or whatever indicator flashed last. There's no structure, no checklist, no process, no rhythm to how they approach the markets. It's like waking up and reinventing the wheel every single morning without a consistent analysis process, a repeatable routine, a structured workflow, or even a clear set of rules that guides their trading decisions. So what is the consequence of this? Without a system or routine, the results are completely unpredictable. Their wins feel accidental, absolutely accidental. Their losses feel confusing, and every day feels like starting from scratch. And this leads to emotional decision making, fatigue, and just disappointment with the constant roller coaster ride of inconsistent performance, just disappointment. And because without structure, you really can't build consistency. And without consistency, you can't grow. And if we have a trading business and we're treating it like a business and not like a hobby, we want to grow in our trading business. And so this will help us grow. So structure builder number 3 is process. A structured investor knows that consistency comes from a process, not from guessing or reacting. They know their system. Okay? They know their system, and if their system produces a result by back testing, then they know that their system can produce consistency if they follow their system. So a structured trader follows a repeatable workflow every day so that they're not waking up every day and reinventing the wheel over and over again. And they follow a proven structure. So for example, they might have a weekly planning routine. And I tell my clients to look at the markets on the weekend and read the analysis articles and come up with some kind of a view for the week, because the markets change week to week, day to day, and you want to have your finger on the pulse and see what news events are coming out, what releases are coming out, and be on top of it. Okay. A daily preparation routine is also important before you start your trading day. And you might do a top-down analysis. You might have a top-down analysis process, looking at the various asset classes, for example, or looking at the market that you're trading and starting from the daily or the weekly and then working down. A structured trader might have a checklist for setups based on their strategy that they're using and a clear method for making decisions the same way every single time. And I know it can be boring, but believe me, boring is good. And I'm speaking from experience. I started trading with JP Morgan in December of 1979. And I have a lot of experience, and I've experienced everything that I'm teaching you today myself. All right. So what is the shift? Instead of randomness, structured traders operate with rhythm. Instead of reacting emotionally, structured traders execute a routine. And instead of chasing opportunities, structured traders follow a process that reveals opportunities. This is how structured traders build consistency, through a disciplined, repeatable process. Now, for this case study, I'm going to show you how I apply structure to analyze the markets. And I do this in three simple steps. Number 1 is the analysis. I start with the 8-wave market cycle. I'm going to show you this just momentarily. And the 8-wave market cycle will tell me where we are in the market cycle. Are we trending? Are we correcting? This gives me the context, and it's called a top-down approach because I do start from the bigger time frames and work my way down. If I can see the pattern in the daily chart, that's fine. Sometimes I even have to go to the weekly chart. And then the second step is strategy, and my strategy is called the Wavy Tunnel Pro. It's an Elliott wave-based framework, and once I know where we are in the cycle, I can identify what trade I'm looking at: trend continuation, a pullback, or market reversal. It's very, very important. The Wavy Tunnel Pro has 6 different trade setups, and it gives me a clear rules-based structure for that decision. And finally, money management and trade management is really, really important. Before I take a trade, I want a position size based on my risk. And once I take the trade, I manage my trade with the trade management strategy, and I'm going to show you that as well. So this is how I use structure in my own trading every day: simple, repeatable, and consistent. So just a little bit of background on market cycles. Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s, and he discovered that stock markets traded in repetitive cycles, and that these cycles or waves reflected the emotions of investors. And then enters Leonardo Fibonacci, who was also part of this. He is known to have discovered the Fibonacci sequence of numbers, a sequence of numbers after 0 and 1, where each successive number is the sum of the 2 previous numbers. So this is the Fibonacci sequence upon which Elliott, based his wave work. Is an important component to his work. And when you take the Fibonacci sequence, you can divide one number by the other, going backwards and forwards, and you get the retracement ratios and the extension/expansion ratios. Okay? The 8-wave market cycle is right here on the left. This is the complete market cycle. And it's based on the wave principle, which says that patterns are tied to collective human behavior related to Fibonacci numbers. You can see all of the numbers here on this diagram from the Fibonacci sequence. On the left, this is called an impulse wave, a motive wave. It's a trend wave. On the right, this is called a corrective wave. It's a zigzag pattern, A, B, C. Corrections are labeled in letters, and trends are labeled in numbers. And you can see the swing highs and lows every step of the way. And this can be any time frame that you're looking at. This can be daily, a weekly, it can be a 5-minute, a 1-minute, a 60-minute, doesn't really matter. You can also see patterns on this. You see head and shoulders formations at the end of every single swing move. So you can see lots of things in the complete market cycle. So what I've done is this is how I describe what I do. This is the 8-wave market cycle. Warren Buffett said, be fearful when others are greedy, be greedy when others are fearful. That's a contrarian view. And if we look at this chart on the right, we start at point 0, and then we move up in a trend. And at point T, this is where the market gets greedy. Traders get greedy. They get optimistic and exuberant. They tend to load up and think that it's going to keep going. And they don't have an out. They don't have an out. And the out is when the market does start to trade down initially, and then retraces, fails to make a new high, most likely it's going to come down in a third leg, the C wave. And this is where traders panic, and they're very discouraged, and they're full of fear, and they tend to bail. When this is the time to be buying, and this is the time to be selling, selling positions that you might have accumulated lower down, buying puts, if that's what you do. And down here, this is a time to be looking to buy into the trend again, because this is a very, very steep correction. And we actually have a beautiful trade called the breakout 4. It's the wave 5 trade that we scan for. We scan for this point, and that's my favorite stock scanning trade. So what does it look like? On the right, we have the chart. This is what the Wavy Tunnel Pro setup looks like. And I do a top-down approach. So I would say, okay, where are we in the trend? And when I see this setup where we have a peak in the awesome oscillator, and then we have a sell-off to the tunnel. This is called the tunnel, and these are called the waves. We have a sell-off and we get a gray semaphore. This is exactly where I'm thinking, okay, this is a good level to go in again, to buy. And this shows up on our scanner. Like these are the charts that show up on our scanner. So here on the left, we're in the uptrend, and then this is a choppy ABC formation for the correction. And this setup tells you when the correction is over. Typically, we go down to the tunnel or even below the tunnel. This is not the time to buy in here when we have this kind of a move. This is the bull trap, it's called. And then we roll over, and the target is the tunnel. And it's all based on the market cycle. So the trades, the end of the trend trade, you want to look for divergence in the awesome oscillator. That's when price makes a new high and the awesome oscillator makes a lower high. So if we were up here, I would say, okay, we have divergence, caution is due. And when we're down here, this is a pullback of the trend, and we're at a nice supporting level here. I would say, okay, this is a pullback. Let's look on the smaller time frames for a possible reversal. So that's my strategy. Here's another example of this same thing where we had divergence in the awesome oscillator at the market peak. We had a nice three-wave pullback into the tunnel, and well, we see what happened. This is where we first saw the trade, and then this is what happened. So to enter the trade, you could go down to a smaller time frame. This is the daily, like I said, and take it, by buying in the underlying or doing some option strategy, and then this is what happened. I mean, it moved up from this inflection point, from this buy point. And the third is optimal risk reward and trade management. With trade management, there are 4 strategies to use, and that's a function of experience. Strategies 1 to 4 go from simple to more complex. Getting in and out all at once, that's the typical simple strategy, getting in and out all at once. Number 2 is what I use, getting in all at once and taking profits at various levels, because I don't want to get out all at once. I want to make sure that that if the market continues to go, I still have something in it. And then getting into the position at various levels and getting out all at once, that's another strategy. And getting in and out at various levels, that's a very complex strategy. So that's what I use. That's what I use to build structure. Okay. Now we're going to talk about performance. Track, review, and improve. Performance, track, review, and improve. And this is really very, very important, because it's not enough to just trade or invest. You need to track your performance. It's just so important. So the 5th unstructured mindset is this: no accountability and no performance review. They don't track or review trades. They don't evaluate performance. They avoid money management and hope trial and error will somehow work. And that's why the image on this slide is a person looking in the mirror, because in trading, there's no boss. no team lead, no manager. Really, the only person you're accountable to is the one in the mirror. And unstructured traders tend to avoid that mirror, i.e. they avoid the data, they avoid the review. So what's the consequence? The consequence is predictable and painful. When you don't track your performance, you never discover what's holding you back. When you don't review your decisions, you repeat the same mistakes over and over again. When you avoid accountability, you avoid growth. And that means one thing: you never reach your full potential as an investor or trader because you cannot improve what you don't measure. A structured investor understands that growth requires measurement. They don't hide from the mirror, they use it. They track their trades. They review their decisions. They analyze their strengths and their weaknesses and build on their strengths. And they study what's working and what's not. I mean, it's if something's working, then you want to continue doing it, even if it's boring. If something's not working, get rid of it. Don't try to improve it if it doesn't resonate with you. You just need to find something that's working. They treat their performance like a business, not a hobby. A structured investor builds a trade journal, a weekly performance review, a monthly accountability check-in, and clear metrics that show whether they are improving or slipping. They learn from the data, not from emotional hindsight. They use structure to make their growth happen. Okay. So what is the shift? When you commit to structured performance review, everything changes. You stop repeating mistakes, you start reinforcing good habits, your confidence rises, and your results can begin to compound. That's performance. And many traders don't have a coach, but it's really important to have a coach. Like if you play tennis, you want to have a coach to improve. If you play an instrument, you want to have a coach to improve. Well, why not have a coach if you're trading or investing your own money, your hard-earned money, right? Sometimes you just need somebody else to talk to listen, and to keep you on track with measuring your performance. So performance review is the final structure builder because it turns your entire investing approach into a continuous improvement engine. Now let me end with a wonderful case study on the fifth structure builder. One of my clients, John, is retired and travels a lot. In fact, I just met him in person 2 weeks ago, I want to say. Yeah, 2 weeks ago. He wanted a trading approach that would give him freedom and consistency, and he achieved both through disciplined performance review and really hard work, dedicated hard work. Once John established his process, everything began to change. And he follows his process rigorously today. And after every single trade, he reviews what happened, what went well, what didn't, and what he can improve on. He tracks everything in a spreadsheet, takes screenshots of his trades, and conducts monthly reviews, quarterly reviews, and an annual performance review to spot patterns and refine his edge. And because he consistently evaluates and improves his performance, his results have started to compound. Literally, when I meet with him, he shows me his trades that he did well with and his trades that he lost money in, and we talk about it, and he tells me how he's going to improve and do better the next time, and he does. So he's retired, he travels often, and he's doing phenomenally well because he treats his performance review like a structured professional, not an unstructured hobbyist. So when you track, review, and refine, your results can compound. So we've covered a lot today, and we have about 5 more minutes, couple more minutes. So let's put it all together. these are the 5 P's, the 5 structure builders for top performing traders, and they're the backbone of every top performing trader. If you apply even one of them, your confidence and consistency might improve. But when you apply all 5, you can transform yourself into a structured trader, more confident, more disciplined, more strategic, and more capable of reaching your full potential. So these are the 5. Purpose, we spoke about that. Person, process, we spoke about that. Plan, and performance. So I want to ask you this question. Take a moment and reflect. Which structure builder do you need to strengthen to unlock your full potential? Everybody will say something else, something different. I'm pretty sure about that, okay? And I'm looking in the chat to see if anybody is typing anything. Okay, so think about that. What structure do you need? All right. So today, I am going to offer you a free gift, chapter 3 from my book. You can scan or visit the Wavy Tunnel, scan the QR code or visit wavytunnelpro.com/chapter-3. It's called Becoming an Entrepreneurial Trader, the Process. And this chapter connects directly to everything we talked about today. So grab the QR code or type the URL. Okay, this is just an extra bonus that I'm throwing in. Okay, to thank you for staying until the end. Now, if you would like to work with me one-on-one and have a free starter session conversation with me, I'm going to offer it to the first 10 people that sign up. You can scan the QR code or visit wavytunnelpro.com/book Jody. And this is in the, you can see it in the chat. So what are we going to do in this session? We're going to assess your current situation. We're going to fill out a structured trader scorecard together, get very clear about your structured trader purpose, and start creating your structured trader plan, which will begin with an action plan for the next month. 3 different things you're going to work on over the next month. That's what we're going to do in the structured conversation together. So here it is, wavytunnelpro.com/book Jody. So if you have any questions, you can contact me, Jody at fxtradersedge.com. But I want to thank you for your time and your attention today and your openness. I love guiding traders on their journey from unstructured trader towards structured trader you're capable of becoming. And before we close, I want to leave you with my favorite coaching poems. Come to the edge, we can't, we're afraid. Come to the edge, we can't, we will fall. Come to the edge, and they came, and he pushed them, and they flew. By Guillaume Apollinaire. And it is my hope for you that as your coach, I can give you that gentle push so you can fly. So thank you, everyone. Let's begin this journey from unstructured to structured trader together.